All right, guys. So, today we're going to discuss, we try to understand, and the reason why a lot of traders are not consistent in their results. And when I was starting out, I felt the same. So one day I'm I'm making profit. Second day I'm making profit, and the week of streaks is, getting profitability, and then one day or 2 day you just ruin the whole month profit. And sometime I make money from Monday to Thursday, and Friday I lose everything what I made it. It's also happened that what I make in the morning and I lose in the afternoon. And I always wonder, by nature I was very curious guy, so I always wonder, why this happens, right? I need to figure out the reason why this happens, and if I able to figure out the mystery of why I'm green for weeks and then one day just bomb and everything's gone, what is the reason why it is that? And I figured out that the reason why this happens is because we do not have our own trade book. And the reason I wanted to teach you guys and I wanted to share this with you, and with a nominal fee only, because I want you guys to be profitable. I want you to be see the success. And the only reason you what I feel, what I believe is you're not able to see the consistent results is because you do not have a of identifying trades, systematic way of identifying the stop losses, systematic way of trading those, and the trade management. And why you do not have those all these things as a systematic way, the reason being that you do not have your trade book. And we're going to discuss what's the trade book. And trade book, I feel that trade book has changed my trading completely. So you have seen the joke around is on the YouTube or sometimes is on the TikTok as well. This guy say, when I go long, stock move down. When I go short, stock bounce back up. And and it's he keep doing the same thing and is just losing money, right? You feel like it's a long, you go long and stock move down, and you feel it's going down, you go short and stock move back up. And why this happens? Because see, you w- there's a theory which I want you to understand, but it's not a topic of today. But since it's important for you to understand as well that the the stock market, everyone comes in the stock market, whether you are long term investor, you are short term investor, you are intraday player, you're medium term, you are swing, whatever your style is, everyone comes to stock market with the one objective is to make money. You have to understand that everyone comes here to make money. We as an intraday trader, we are also here to make money. And what we look for the opportunities where there's an imbalance between the buyers and the seller, and we see that some in the possible situation we see someone is winning, and whoever is the winning in the situation, as a day trader, as an intraday trader, our job is to identify that and join that group, because in itself we are too small to move the market. We don't have any sufficient buying power to move the market. What our job is, through the technical analysis, we need to identify that who is winning. And once we know that who is winning, we need to find a spot where we can go in and make money. So we're going to discuss in detail about how all these factors you can incorporate into your trade book and be consistent in your trading. But before we move on and start discussing some of the content of the trade book, let's discuss the important point that how everything works. So in the day trading business, Some people think, oh, it's only the strategy and the technical analysis is important. Once you master this, you will be able to make money. No, there is a four big component to be profitable in your day trading. And all four together, when combined, the fifth piece comes out, which is psychology and your personality. Until then, you never able to make money. So, for instance, if you are technically very strong, you can identify the trade ideas, when is to go long, when is to go short. But if your money management, your risk management, your trade management is not good, you will not have worked on these three areas, you will likely lose money. You will never going to be consistent. Similarly, you have a good money management rules, you have a good risk management principles, you know your strategies, you know your technical analysis, you know when to enter, when to stop, when to take partials, how many shares to enter, what is your risk unit, you know everything. But then the idea is that your funding is so limited that you won't be able to trade two trades together. You have a limited capital, and if your capital is constrained, you won't be able to make money. So, or maybe you can go to two trades, but when you see a good opportunity where you want to add, you don't have enough capacity or capability or funding to add to that position. You're not going to make money. The fourth situation, you know your strategy, you have your fundings, you have your risk management, but you do not have a good technology or execution platform. You don't have a hotkeys. You don't have a technical charting properly. You do not have a real-time execution. Your market depth is not that strong. You don't see the all level two picture. So if that is not clean, if that's this your platform is doesn't support, then again you're going to lose money. And everything is there. You have a technology, you have a strategy, you have a funding, you have a risk management, but then guess what? By nature, you cannot take stop losses. By personality, uh, you get emotional, you get greedy. And if that's just your personality, that you do not have your control in your personal life, in your individual life, you do not follow commitments, you do not follow rules, you by nature is very creative. And if your that is your personality, maybe then trading would may not for you, because you won't be able to execute the trades. Trading is about the rules. I know it sound a cliche that you guys are here to get the freedom when you want to do an intraday trading. But this cliche, in order to get the freedom of your life, you need to follow the rules. So strange, right? Everyone, every time you heard on the YouTube and you say, "Oh, I just wake up, take few steps, and this is my office, and I trade execute it, and you outside the beach." That is not true. In order to make money, you need to have your consistent routine. You need to have a consistent uh, your psychology, consistent behavior, your consistent routine, your attitude. If your attitude, your behavior is not consistent in your life outside the trading, you might not able to get the results, consistent result in the trading, because market is so random. Market is absolutely random. There are a lot of possibilities. There's thousands and millions of traders are trading every day. There are millions of strategies, but you need to pick your strategy which suits your personality and you make money, right? If you think that your temperament get you can concentrate for that much energy, that much level in the intraday, maybe you need to think about it. So not every strategy is for you. The market is for everyone. Everyone makes money from the market, but you need to have all five things together to give you better results for your trading. If you have missing any of the component, if anything is imbalanced between there, you won't be able to make money. So before we move on and start discussing that how you can achieve some of these factors through your trade book, Do you guys have any question? I wanted to open this for your questions. If you have any questions so far, feel free to ask over the voice or over the message if you have any questions so far. And also, if you do not have any questions, you can just say that we are good, and I can move to the next slides too. All right. I think Marisa is typing. Okay, so see, this is a very important question that, what the question has been asked that I'm just going to repeat the question because for the recording session, they may not able to see your comments. So the question is that what do you do to improve your behavior when things are going out of control? What I'm trying to say that if you have four components in place, there should never be a situation where things go out of control. If things are going out of control, it means that one of the component is missing. So, as an individual, for instance, when things gonna go out of control, when I break my risk management rules, I break my money management rules. Maybe I go oversize, or maybe I got FOMO and I just entered into the trade without determining the right stop losses or right sizing. And that's the only situation where you can feel that, oh, things are going out of control. So, my advice is that if you come to the situation every now and then to the point where you feel that things are out of control, is mean that we need to do a diagnostic session. You need to do your self reflection. Maybe you can take help of me, and you need to analyze by analyzing each and every trade to see that what is the one of the component is going wrong. For instance, you're going out of control is because of not the risk management. You maybe the size appropriately, but maybe your analysis, your trade ideas are wrong. You're getting the wrong ideas, right? Your execution is not perfect, and it could be different. There are different solutions for the different situation. So we need to do a diagnosis to see that what exactly is getting out of control, right? For instance, things getting out of control because your platform is stops, and then you get frustrated, and after actions you take after the resume of your platform, then you things getting out of control. So we need to do a pure diagnosis here to understand that what exactly is going out of control in your trading, and based on that there will be a solutions for you to improve. Okay, so you do as your self reflection to see, okay, where which component is going out of control for you. And as I think Lois also highlighted, and let me just tell you, the Lois is the one I'm working with him from last few months on one-on sessions and helping him improve your trading. He can tell you that how much he's improved. But one thing which is very important for your day trading career is to have your own rules. If you do not have a rules And rule is not just like that, okay, I'm not going to do this, I'm not going to do this, I'm only going to trade 3 trades, I'm only going to do this. No, rules are for each and every area, right? For instance, if your platform doesn't work, what you need to do, if you do not have a funding, what you need to do, what are the rules you need to follow for strategy, right? Would you focus on daily to intraday, intraday to daily? What kind of technical analysis you do? What kind of strategy do you follow? So you need to have the rules for each and every category, which we in is in picture right now. All right. So I guess there's no other question. I think John was typing. So John, do you have any questions, or should I move to the next slide? Okay. Is John maybe because you are logging from the two different Skypes? Other guys also having issues that you guys hear me twice? John, maybe do you wanna sign out from the one login ID because you log in from two different IDs? That may be the reason. All right. Okay. So let's wait for 1 minute until the John comes back, and then we move to the next slide, because next slide is very important, where we're going to discuss what is the trade book is all about, and we're going to go into the examples to see and to learn. And this is going to be a very important session for you guys, and I'm gonna bet you that the things you're gonna learn, if you follow in the following days, you will see the results. It will help you to become a good trader, a consistent trader. Right, let's wait a few more seconds. All right, let's few more seconds. Yeah, meantime, if you want to ask the question, you can ask any other questions you have. I was sharing one of the components here that uh, many people think that just trading in the market, and if you are profitable one day you will profitable. Market doesn't work like that. You may be consistent for a month, and you just not follow the rules for the one day, and that one day market gonna punish you enough to take all of your profits. So despite we say that the trading gonna give you freedom in your personal life, but not so. It's just like any other celebrity, right? So if you know, they are very famous, they have make a lot of money, right? They have fame, they have a glamour, but what happens? Would they able to enjoy each and every food? No, because they need to follow the strict diet. All right. Would they able to go out and enjoy every resort? No, they have a private life because people follow them. So it's just like that. Even it's just like any other career, the big careers. This day trading is like that. It will give you the freedom, but freedom has a cost. It has a lot of rules to follow. You have a diet, you don't need to take alcohol, and so many other things you need to follow to be a consistent trader. If you're not consistent in the daily routine what you have, you're definitely going to struggle as a trader. Okay, so I'm not sure John has not responded, but let's start with the next slide because otherwise we won't be able enough time to cover that. So, what is a trade book? We discussed trade book, trade book. I have keep saying trade book. Basically, the trade book has a criteria which provide you a systematic way of identifying trades. So, for instance, every moving stock which is gap up today doesn't mean you need to go long. Any gap down stock doesn't mean that you need to go short. And why I'm saying that, right? We will discuss that. The trade book will provide you a systematic way of identifying trades. It will add the objectivity because anything which make you consistent in your day trading is the objectivity of identifying your trade ideas. If your trade ideas are based on lack of objectivity, right? You are biased on the stock. For instance, if just like a lot of people today, lost money in Moderna, mRNA, right? They wanted to short. From last few days, people trying to short because it's so extended. So you are biased that it's gonna comes down. It doesn't mean it's gonna comes down, right? You need to see the price action and you need to evaluate objectively whether when you're going to go short, do you have any edge? And how would you identify the edge? Edge you can identify when you have a set of parameters, a fixed variables, right? The fixed variables you use to identify your trade idea for each and every trade. So if you identify the trade with the different criterias, you will never able to make money, right? Once you add the objectivity and your fixed set of parameters to identify your trade ideas, so you need a variables for what? You need a variables or set of parameters to identify your trade idea. Then you need a set of parameters to get the confirmation about your trade idea. Then you need a set of parameters to identify the trade entry. Once you have the trade idea and the confirmation in place, now you need to wait for your right entry, the best price to enter. Once you have all these three, then you will take partial. But I think I missed one thing that before uh, before you identify the entry, you need to see that based on your set of parameters, do you have the stop loss? And like everyone else, they look for the idea and they look just execute the entry. The real chronological order to find an execution or do an execution of any trade is the following. You need to first identify your trade idea. Then you need to wait for your set of parameters which tell you to confirmation about your idea, that whether, for instance, if you're thinking about going long, does those confirmation criteria available to tell you that yes, your idea is right, price action supports your idea, this is long. Then you need to find for an exit. Okay, if you enter on this price, do you have a right stop loss? If you do not have a right stop loss, it's mean that your entry is not good. So you need to wait to find the right stop loss. Once you have a right stop loss, as the same token, you're gonna get the entry. You once you get the entry, You take your partials and your profit. For instance, you have the trade idea, you have confirmation, you have a right stop loss, right? But you think that your risk to reward ratio is not there. The next support is very close by after 10 cents. Your stop loss is 15 cents and your profit target is only 10 cents away. Would you go and take the entry? No. All those things need to be there, exactly need to be there before you click buy or sell button. And everything what I've just discussed, it has to be part of your trade book. If it's not there, if it's not written, your trade ideas rule, your confirmation rules, your stop loss rules, your your entry, your partial, your exit, if it's not been defined as part of your trade book, you will never able to get consistent. I want to repeat again. Market is random. Market has a millions of opportunities there, a millions of traders trading every day, yeah, millions of strategies. You need to define yourself. If market is random and you are not explaining and defining your criteria, you will be lost in the randomness. So in order for you to be recover and not to be become a loser in your trades, you need to be consistently define your rules. And let me just repeat for the John and for everyone so that it ingrain in your mind. I cannot emphasize enough that how important it is for you guys to understand that trade book will help you, provides you a systematic way of identifying trades. For any trade book to be successful, you need a set of parameters or variables to identify your trade idea. Once you have an idea, you need a variables to confirm to your idea. Once you get a confirmation about a trade idea, you need to find the stop loss which fits your strategy, which fits your tolerance. Once you have the stop loss, you will find an entry. Once you have an entry, you will only execute the if there is a profit targets and the risk to reward ratio is available. If all things are not together, it will never give you a higher probability of achieving your results. And that is called edge. You have heard everyone say, oh, you need to have an edge, you need to have a system. What is all these about? These are all garbage words. The real thing is that you need to know that your criteria to identify your trade ideas, confirmation, stop losses, entries, and exit. Before we move on and discuss that what kind of parameters could it be, I want to open again this forum to ask the question because it's very important for you guys to ask the question, because if you're not going to ask the question, you still have confusion. What you up to do now? If you were doing what you're doing up to now, it was working, and then you might not be attending this workshop. Since you're attending this workshop, this means that something is not working what you were doing. So you need to ask the question for you to understand this concept. And I'm going to tell you that if you're going to implement in your trading, it's going to change your reading. So anyone want to write the question, right? Or speak over the voice, they can do that. And feel free to raise the question so at least I know that you guys have a question. Anyone else have any questions or you want me to move on? I would encourage you guys to ask the question. It's very important for you guys to understand this. If you have no question, just say no so I can move on. Awesome. So no questions. Okay. All right. Okay. So let's move on. What examples of the parameters which you can use while you confirming your trade ideas or confirmations and everything? Example of the parameters. Okay. We will go, yes, these are all the components of the trade book. We are going step by step and then we're going to form it. Okay. So you guys going to do a lot of exercise too. Now, what could be an example of the parameters? We all know gapping up and gapping down is one of the criteria for most of us because we do intraday trade and we look for the gappers. But you need to understand what gapping criteria means, that any gapper, 2% gapper, 5% gapper, 10% gapper, 30% gapper. Sometimes the stocks are up by 150%. What kind of gapping criteria is for you? What kind of stocks you wanted to trade? For me, if a stock is gapping up more than 10-15%, I usually avoid them. I don't trade them because for me, that is very volatile stocks. I cannot trade them. I cannot, my strategy, my edge doesn't work on those stocks because it's too much volatility in the stock. Not every gap up and down is going to be the same way you're gonna trade. It's very important for you in your trade book when you identify any trade idea. So, for instance, if the gapping is the stock, let's see, as an example is that I think today was the stock IVMW. I think let me check. I think that was a stock. Uh, IMNM. Okay, IMNM. Okay, this is stock. What happened? IMNM. Look at this. IMNM was up more than 50% today, right? And would you able to trade that stock? I didn't shortlisted it, but it was gapping up. Would you go a long strategy? You can go for long strategies for moving up, but would you wanna go that? I didn't go because my strategy, my system, my tolerance for the stocks which are gapping that much high is unsustainable. I cannot trade them. So, for instance, why you are getting inconsistent results could be the one is that sometime you are trading only 4% gappers, sometime you're looking for 5% gappers, sometime you're trading the stocks which are more than 10, 15, 20% up or down. And since you are not fixed in your variables and defining that what is the exact gapping criteria you're going to play, therefore you see the inconsistent results. Did you understand what I'm trying to say? I really need your participation here, saying yes or no, because that is very important concept I wanted to tell you. That e- gapping up doesn't mean that gapping up. You need to further filter your criteria to see, okay, is this 5% up? It is 10% up. It is 15% up. Is it 30% up? Would you able to deal with this volatility? So you need to narrow your criteria, your trade book, to identify, okay, I'm only going to trade the stock which are 3% to 5% gappers. Okay, good. So if you are clear, then very nice. Because if you're not clear, then you go never gonna get the consistent results. So this is one of the criteria you need to learn. Not every gapping up, every gapping down percentage is the same. They are different. Just like you have a personality, I have a personality. Similarly, stock has a personality too. And if I show you this IMNMW, look at here, and you will see here it was gapped up to 25 and it's just sold off all the way to the end 84. So it never moved back and make the new high. So if you're gonna continue and just trade this and thinking, oh, it's gonna make the new high, and you get just stubborn and you just keep trading and trading the stock, you might gonna lose your account in the one day. So it's very important for you guys to understand and narrow down your gapping criteria. Next one is a market cap. I've seen so many, I do everyday free market shows, right? You guys are welcome to come and learn from that. Is free. You should attend. Is 15-20 minutes and it's going to help you. I've seen many traders comes in, right? One day they are looking at nano cap, the stock which is only 2 million shares. One day they give me the share which are, large caps. One day they come back and give me a small cap. You cannot do that. You cannot. As for instance, if the gapping up stock is gapped up 3%, but the stock is only having shares, 3 million shares float, you cannot treat them the same stock as the IBM 3% up, or the large or any other large cap 3% up, right? Or Oracle 3% up. You need to understand the market cap. I remember, I still can't forget the day I was up in a whole month, almost 4,000 something I made that month. And I'm following the chat room, and they asked me, at the time I was learning, and they asked me to we short OSTK. You guys remember OSTK? Last year was a very active. These days is not really active, but last year was very active. OSTK, which is Overstock company, has a share float is only 42 million. I went short that stock. It was gapping down the day. That stock moved 5 points in 2 minutes, and I was paralyzed to do any action. I was got paralyzed. 2 minutes, 5 points move. I was not even expecting that much move, and I lost all my profit for the whole month in just one trade. Why? Because I was so uneducated to understand that these small nano caps, which are very small, 40 millions, 30 millions, 2 million, 10 million shares, they are not like any other small, like a small cap and large cap. They are volatile. They can squeezed. If the up to the day there's only 2 million shares have been traded, any big order comes in for 200,000, 300,000 shares, market makers does not have that many inventory, and they're gonna just rip the price or bring it down closely. They're gonna remove the liquidity. Why? Because market makers are here to make money, right? You need to understand that market makers keep the inventory based on the expected reasonable inventory they want to sell to the market participants. And as a trader, if you went 500 shares short, thinking you're gonna get 50 cents out of it, and this is a nano cap or small or micro cap company, and 100,000 shares comes in, what you think? Sudden imbalance gonna create in the stock, and the intraday trend gonna get changed. It's gonna spike up for next 3 minutes, and you do not have any other choice because we have a funding restrictions. We have a smaller accounts. We have to close it, and once you close it, what happened? Stop drop immediately. So again, market cap, if you do not know the market cap of the stock, do not trade that stock. It is that important. Do you guys follow? Do you guys understand what I'm saying here? You can say yes or no, or if you have any questions, you can feel free to ask. And let me ask you this question, because since you're here, how many of you guys follow market cap? Yeah, so okay, so far 50%. We needed two participants to know. And Louis, you can answer before you joined me. Were you used to use the look at the market cap or not? I know you look at now, but I wanted to understand before. So no. Yeah. So majority no. Yes. Yeah, the candle formation is not enough. You need to know the market yes, so you need to understand the market cap. Just like you and me have a different personality, different caps have different personality. And as I said, if the stock is only have a 1 million, 2 million, 5 million shares outstanding, you cannot expect to be the same liquid as the large cap or the medium cap. All right, the next one is the float. This is also very important for you guys to understand. Any stock you trade, in your trade book, you need to understand that you need to check these things. For instance, your idea, one stock is gap down 4%. Okay, one stock gap down 4%, and you are finding based on the your criteria, your formation, your gapping criteria, that stock is intraday trending down, daily trending down, and you have a perfect formation to go short. Okay, everything, all criteria met, right? And suddenly the order comes in and you get squeezed, right? How many times it happens to you guys? Okay, and you get paralyzed. Why you get paralyzed? Because you are not prepared. It can squeeze anytime. It can squeeze to me now as well. But point is that if you know the short float, that what is the short ratio of that stock, you will be ready to see that if there would be any spike or any squeeze, you're gonna immediately stop out and you flip your biases and you uh, look for a bullish trend. How many of you guys look at the short float? I'm telling you, let me show you the example. The one day I was trading GSX. Now there is no GXS, is this GOTU, okay? And I will show you what happened with me. I think this was a day. Do you see this candle? I still remember. And it's not too far away. Do you see this? This candle, March. This is the daily bars. Do you see the March? It gapped down. It gapped down to 70. Look at this. It loses all the previous supports. I was thinking I was so short biased. And I was thinking, okay, it's gonna continue. This is going to be my trade of the month or maybe trade of the year. I went short here. This GXX at the time, go to now, was has a right now is a very less float, but at that time it was I think more than 40% short float. And what happened? I was stubborn. I was not looking at the short float at that day, and this stock moved from 70 to 91. And whole day I was just staring this chart, not doing any other trade. I want the stocks to come down. I'm waiting for a right formation, this stock to come down, but this stock never gave me the chance to come short. From 70 to 91, almost $20. And that's make you paralyzed. That make you paralyzed. Why? Because you were not expecting. And what I'm telling you, you still get short squeezed. You're still gonna get squeezed. You're gonna see the pattern. You need the other criteria fulfill. You go short. But what I'm telling you, that if you have a criteria define in your trade book, and if you see there is a high short float, you will be mentally prepared. Okay, this stock might have a possibility because it's already breaking down. Okay, all the supports is further coming down, high short float ratio, it might gonna squeeze back. If you're not ready, if you're not prepared, what gonna happen? You know that what gonna happen then. Did you do you guys understand that how important is the short float to have that into your criteria. Do you guys use this short float ratio to see before you guys trade? You guys should look at it. It's very, very important. I cannot emphasize enough. And these just the examples. And I'm gonna show you the more example. It's depend what kind of a trader you are. All these examples need to be in your trade book. If you do not have these criteria explained and defined, that what kind of a stock you trade, just like my criteria is if the stock is heavily shorted, has a short float of over 15%, if stock is gapping down, I am not going to go short on that stock. Doesn't really matter that it move another 5 points, but I'm not going to go short on that stock. This is my rule because mentally, when it squeeze me suddenly out of 2 3 points, psychologically, it's hard for me to handle that. So for me, I don't trade that. You need to also understand your personality. That would you able to take sudden, shocks that you were expecting for only for 30 cents and stock squeeze you 80 cents in a 1 second. Would you able to bear that shock? Were you mentally ready for that shock? If you are not ready and if you're not that person who can handle that kind of a shock, then you have to explain and define and narrow your trade criteria, your short float criteria to see, okay, if this stock, just like if you look at the Sophie now, Sophie in a couple of time days is coming too much coming down. Okay. But every day when I was looking at it, I only look for the squeeze. Okay. I'm stalking this stock from the day when it is 16, from 18. Okay. From here. It from 18 to 15, it move another point. But look at how what is the short float here? 41%. I'm not going to short that, even though it has a possibility. But I'm not going to touch that stock for the short. I'm watching this stock to see when this stock is going to turn back and squeeze the short sellers. And when it's going to, you know, squeeze the short sellers, I'm going to go and I'm gonna join the bullish side of it. How's the session going so far? Awesome. So you guys are enjoying. So that's good to hear. All right. So I'm gonna go through all of them, but if you we have a 6:30 already, so I'm going to do this example because these are the small one examples which you need to define in your trade book. Next one is the performance of the week and the month. That is go with the short float and extended through. So if the stock is came more than 20% in a week, and for instance, today is a Thursday, stock is already 20% down in a week, usually I don't go short on that stock too. And the reason being why? Because see, this is a US stock market, a most stable economy in the world, right? The companies are the good companies are listed here. So many investors are investing in those companies. So if they see the 20% is down, they might mind to go and average down and buy more, right? So I don't want to come in between them. So I will look those which are more high probable edge and probability for me to be successful. If a stock is extended more than 15-20% down or 15-20% gapped up on the week, I I may go and look at the extended strategy and take the reversal, but I never gonna join them on the upside. or never gonna join on the downside. I will wait until I see a clear uh, idea for me to join. Okay, I don't want to be a participant of the stock which I do not have a clear edge. Volume of the day is heavily important. Some I see some traders just look at the formation, you know, doesn't go and look just like I'm going to show you the example. Okay, let me show you example on here. Okay, let me show you the example on this chart so you can see. Okay, let me look at the S. Now I'm going to show you a clear example. Okay, this is the S. Yesterday came down. Okay, I was bullish on the stock. Okay, and you can also confirm this from Lois, because Lois was has joined my life mentoring session, so he's with me. And I told him on the live session that this is look really look a very nice entry over 45.50 for long on this side. Okay, here at 9:45. Then I checked the volume. Look at the 1 minute candle, so you were able to see what I'm trying to say. Look at the how the candles are forming. Do you see that? No volume, no volume. His 5 minute looks really beautiful because I was looking at the 5 minute. But when I checked the 1 minute, there was no volume. Okay. It still has a volume, more than 5%, maybe 200,000, 300,000 shares. But then it moved after 1450. It went all the up to $47. So almost 1.5 point move, which is good. 1.5 point move is really nice, and no pullback, right? Easy going. But it will never fit into my criteria. I don't want to be part of the trades who does not have the volume. Okay, I don't want to be the part of the trade where I go long here and I see the $2 bar red side, or if I go short and you see a $2 up. I don't want to be part of those trades. It's very important for you to understand and identify what is best volume for you. For me, average volume of the stock, if I day trade, I need at least 750,000 shares. And on the day I'm trading, it has to be 500,000 shares. If it doesn't have the volume, it means that it doesn't have the volatility. Whether the stock can move, yes, stock can still move. But do I need to be part of that trade? No, I do not need to be part of that trade. Because these trades, you just need a one trade to kill your account. Okay, similarly you're looking at the gappers. So for instance, I see a gapper, uh, and stock gapped up by 4%, but what is the volume is only 20,000 shares have been traded. Would I'm going to go and trade this? Would the stock is going to be in my watch list? Yeah, it is gapped up 4%, which fit my criteria, but no. But other criteria for me to have a pre-market volume at least 500,000, 400,000, it doesn't fit my criteria. What I'm going to do, I'm not going to watch the stock. Why? Because based on my trade book, to get the consistent result, to have a high probability trade of successful trades, where I know as a retail trader, I do not have a power to move the market. I need a market participants to move the market, and I want to join the participant who is winning. And for me to guess to do this technical analysis, I need a volume. And if it doesn't have the volume, I'm not going to trade. Similarly, some people can say, "Oh, it's gapped up to 4%. Wow, beautiful, 500,000 shares. Everything is done." Right? Have you guys looked at the average true range? This stock doesn't move more than 80 cents in a day. Would you able to day trade that stock? Would you able to make money out of that stock if the stock is only move 80 cents? From the 80 cents, you're expecting a 40, 50 cents to get the partial, or 30 cents. So you want 50% of the daily return out of the stock when it moves. It is possible to get in the first 15 minutes. No, you might need to wait for the whole day, and I don't have the whole day to trade. What I'm going to do, I'm just going to say that this stock doesn't fit my trade book criteria. I'm going to discard that. How many of you guys look at the average true range? Good, John. Yeah. So ATR means on average day, how much stocks move. So if you go here, for instance, look at here. So let me pull the Finvis again. This is a Finvis, okay? And here is the ATR. ATR, average to range. This as stock moved $4.51. So it's 404 points and 50 cents move every day. Would you able to get 1 point out of it? Yes, you can get 1 point out of it. Is a good day trading stock? Yes, you can trade that, but does it have a volume? Maybe on that day there is no volume, so you're not going to trade. Look at the Neo. Neo, what is the Neo ATR? $2.51. So 2 points and 51 cents ATR is for Neo. Would you able to get the 50 cents out of it? Yes. Would you able to trade that stock? Yes. Is this clear? Quita, it's okay for you to understand the ATR now so we can move? Okay, perfect. So similarly, the R valve, relative volume, R valve is very important. So for instance, we say, okay, stock is moving, have a average volume per day is 1 million shares. Pre-market volume is 250,000. So it's mean that 25% is already been happening in the pre-market, right? 1 million is average, and the 25% is the pre-market volume. Okay, so it's only 25%. So what would be the R valve? Maybe R valve will be uh, we can say unless it we move to the next further away. But if we have other stock which has a 1 million average volume per day, and pre-market volume is already 1 million, right? So we're gonna say the R wall for this stock is really good, is maybe the over 100%, because the pre-market volume is already covered the whole day volume. So it's very important to gauge the volatility to see that the market participant interest, relative volume is very important. So you will see that, okay, where is RVOV? RVOV is on the downward side. When the stock is coming down, it was going up. What is a pattern people are noticing? You will This will help you to understand all these things. Next is the specific patterns, right? So different people trade differently. I usually like to see the patterns. Okay, I like to see the patterns. I like to see that some people trade cup and handle, head and shoulder. Some people trade breakout trades. Some people traders trade breakdown trades. Some traders trade high of the day, low of the day trades. But would you go each and every high of the day trade and low of the day, or you look for specific patterns? You look for moving averages? How you gonna do that? All these things has to be defined as part of your trade book. If these are not defined, imagine what you're gonna do. You're never gonna be consistent. Price of the stock. Would you trade less than $10 stocks? Do you trade between $10 to $30 stocks? Or do you trade more than $100 price stocks or $500 stocks? Right? You have to identify that what is your comfort zone. I don't like trading more than $200 stocks. Tesla, I don't like trading. It's too hard for me to manage the risk. Okay. too hard to manage risk, too volatile for me. One candle move up and down so quickly. Price of the stock is very important for me. Just like you have a character, you have a personality, similarly I have a personality, right? Stock has personality. So you need to understand that different prices impact different stocks because different traders trade different stocks, right? I don't like to trade high price stocks because I felt that is more traded by algos. For me to understand the price action of the high price stocks, I make a lot of mistakes analyzing. And if I'm here to make money, why should I do the things in my live account where I know I make mistakes? I do not need to do that. So I don't like to trade expensive stock. I like to stay in my comfort zone where I can make money, where can I have a reasonable edge, high probability edge to predict what stock is going to do. Similarly, the spreads. So one day, one of the student came in and say, I lost so much money, uh, trading Apple or some other stock. So I say, why did you trade those stocks? They say, oh, it has a good formation. I said, these are the market stocks. You cannot trade until the SPY or NASDAQ is moving too much. If the SPY and NASDAQ are in the close range, how can you trade those market stocks unless there is a catalyst on the stock, unless there is a news for this stock? If there is no significant news, how would you trade those market stocks? Do you know how to identify the market stocks? Guys, I'm asking you guys, do you guys know how to identify the market stocks? Yeah, market stocks are one who are heavily weighted in the index. And if the SPY is not moving or NASDAQs are not moving, how would you trade it? And I will give you example. The other way to identify that, how would you know that which other stocks are heavily, institutional owned or the market indexed heavy? Look at this. What is this stock? Bank of America. Okay, Bank of America. Do you know what is this beta called? Beta? Do you guys know what is beta or beta? Here, my cursor. I will wait for a few seconds to answer what is beta. Okay, what is beta, Mariso? Correct. The John said that the move the stock makes compared to the market. So if the so beta is the correlation of the underlying stock price compared to the index price. So this is stock is listed in index, and this is the Bank of America. So Bank of America, if the index move $1, if index move $1, beta going to move Bank of America gonna move $1.54. Okay, and you can see here, and you can see here. Yesterday, look at this. The market and and Bank of America both are doji. Same direction, yes, because the positive beta. If there is a negative correlation, then it's going to opposite side. And look at this today. Market went up, Bank of America move up. Now look at the Apple, 1.2. Okay. Look at the Facebook, 1.29. Look at the candle size. Their candles, all these market stocks candles are exactly the same as the SPY candles on the day before. Why is that? The simple reason, because they follow the market. And if the when the stock was churning on the tight range, look at what Facebook was doing. Exactly on the tight range. When the market is moving, gapping up, or trying to make a new high, Facebook is trying to make a new high too. Look at the Microsoft MSFT. Look at this, 0.78. And look at all these charts look exactly the same. Whether you see the SPY, now I'm going to show you the SPY chart. Look at the SPY chart. Do you see that? Exactly same. They're trying to move up high, come down, make the new high. So what I'm trying to teach you, what I'm trying to explain to you here, what is the concept? Concept is simple. If the index is on the tight range, you need to understand that you can trade these market stocks unless there is unless there is an individual catalyst, news for that particular stock. If there is nothing, you won't be able to trade them, and definitely you're going to lose money because the stock is not doing in itself anything. All the stock move because the market is moving. If market is moving up, the stock's going to move up. If the market is coming down, the stock's going to come down unless there is specific news for this stock. If there is no news, institutional investors, long-term investors, when they're going to buy SPY, when they're going to invest on the ETF index ETFs, these stocks going to move up. Why? Because someone is buying SPY. If they're buying SPY, ultimately what they're doing, the top 10 holding of the SPY is, you want to see what is the top 10 holding of the SPY? I will show you. Just Google it, top 10 holding of SPY. I'm bringing it here, okay? Look at this. Look at here. Which one are the top 10 holdings? Berkshire, Tesla, NVDA, JP Morgan, right? And you can go and look at all of them. So it means that anyone who wanted to buy an ETF of a SPY, what they're gonna do? They're ultimately buying Tesla. They're buying NVIDIA. They're buying JP Morgan. So it's always and always very hard to trade these market stocks unless you see a clear direction of a SPY and the Nasdaq are moving. If you have a clear direction, then easier for these stocks to trade. If not, then it's very hard to. And I'm gonna show you one more thing. So I was trading Facebook a day before, right? When the market is coming down, I traded. I think I traded when I traded on Friday. Yeah, here. So 5 minutes on Friday. What was the date on Friday? 16th. Here. So I think I shot it around 341. I made some profit here. Then look at it, the stock, the SPY bounced back after 12 o'clock. Facebook bounced back. Then SPY came down and the Facebook came down. But would you able to predict that movement? You can't predict. So it's always hard for the stocks to trade these market stocks. So now if I summarize, which we have discussed before, uh, what and I'm going to share you as well. Let me just share you. Uh, Trade book. Okay. Okay. You can guys can access. Uh, Try this link. Does it work for you guys? Check this link. Does it work for you guys? Let me. Okay. Okay. Try one more time with a refresh, please. Let me post one more time and try to refresh this. Well, okay. Awesome. Okay. And let's try. You can keep, if you have a two screens, you can keep this open, okay, on your screen, and I'm gonna walk you through this, okay. Let me walk you through this screen, okay. 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 So how do you build your trade book? Okay, you can keep the format in front of you, and I'm gonna walk you through one by one heading and how I make my own trade book. And I want you to uh, I want you guys to make your own trade book like this if you really want to see a consistent result. Okay. So some of the parameters I explained, that is about my trading idea. Okay, I as explained to you. Let me just rephrase it to you. Okay, so I want before for my idea, I want a gapping criteria 4%. Okay, more than 3%. I need a market cap, has to be a small cap and above. Okay, I need if I'm going short, I don't want to see a short float more than 7-8%. If I don't want to see, if I'm planning for short, I don't want to see a performance of the week and month on extended side. I have a specific volume, average volume, as we've discussed, the pre-market. All these things which I've discussed here going to help you to identify uh, the stocks for you. Okay, you're going to give the idea. Okay, this is a way you identify the stocks. So once you have identified the stock, what next? Okay, so now this is my strategy. Is always good. Okay, is always good to give the name to your strategy. So I will start the template which I've just shared with you. Name of the strategy. For me, the name of the strategy is 5-minute breakdown strategy. Okay, this is let me this is what are these are the reversal entries for the stocks which are gapped up. So this is not, I'm not trading gap and go. So for instance, I'm saying that based on the pre-market action, I saw that the stock is getting weaker in the pre-market. Okay, so stock is getting weak in the pre-market. It started gapped up, is a gapped up stock, but based on the pre-market analysis, I see the weakness. So my this specific strategy This specific strategy helped me to talk about gap up stocks, and I'm bearish on that based on my analysis. So my strategy name is 5 minute breakdown strategy. It depends on you that how many time frame I follow. Usually I follow 1 and 5 minutes. Okay, I will explain my strategy. This strategy is about opposite to the trend in the direction of the trend. Stocks need to be weak and stay below the pre-market resistance. Do you see how I'm explaining that? I wanted to see all these criteria. These are my trade ideas. Stock has to be weak, pre-market, and has to be under the VWAP. If it's not there, then I'm not going to trade on the short side. What is the time to occur this trade? The time to occur is 9:30 to 9:45. So this strategy, this trade book, only valid for what? For first 15 minutes. If it doesn't happen in the first 15 minutes, it means that the strategy is not appearing today. So I'm not gonna trade that. Signal to identify the trade idea. So once I have the strategy in mind, I saw that the idea is weak. Okay, now I need to identify the signals to enter. If I have a big candle, okay, if a first 5 minutes I have a big candle, let me just draw for you guys to understand. Okay, let me show you. So here, okay, for instance, uh, take a pen. Okay, so this is the our chart. Okay, time 9:30. Excuse me for the writing. Okay, 9:30, and this is a price. Okay, and now market opens. Okay, so we were looking for the week, and we are looking for a breakdown. So I want to see. So what I wanted to see, first 5 minute candle. Okay, first 5 minute candle. This bar do not need to be big. It has to be a small size, which I just showed here. If it's big like this, if it's big like this, extended bar, what I'm going to do, I'm not going to trade this trade. And what I'm doing, I'm explaining each and every thing in my trade book. What I'm doing here, I'm defining each and everything into my trade to see that when I'm going to trade. If I see the extended bar, this strategy is not going to work. Is going to I do not have a probable age. What I'm looking for, first candle should be red and small. If it's too big or it has, you know, uh, let me take this pen, and if it's and let me take this brush as too, and here, okay. So if I see a big topping tail, bottoming tail, okay, is mean that there is a buying pressure. So I'm not going to trade that. What I want, a small, I want to see in a small candle. That's fine if it has a small tail as well. But I don't want to see the big tail. I don't want to see a big candle. If it's there, the strategy is not going to work. What I'm doing, I'm explaining first candle should be red, small. Stay below the pre-market resistance level. Okay, if it's above the resistance level, then it might be consolidating and it wanted to move up. Okay, so I wanted to see both these two conditions to be met. Yeah, because this strategy is a reversal strategy. I'm going opposite of the direction of the trend. The bigger trend is the gap up stock, and I'm looking for a short side quick momentum towards the downside. But for that, for me to do, what I'm looking for is a 5 minute candle, and I can also do in the 1 minute. I have both strategy in a 1 minute and 5 minute, but what I'm sharing you right now is only the 5 minute candle. Okay, So what I'm trying to explain to you, what takeaway for you is this section is not to teach you my strategy. That is going to take you time. It's a different course where I need to help you to to teach you my strategy and all the criterias. Right now, what I'm teaching you here, that if you have your strategy you follow, you should have your trade book, and you should identify all these factors. These has to be constant for you to be a consistent trader. If you do not have these criteria in that detail, I bet you never able to get the consistency in the market, because market is random. In order for you to make money, you have to do a same thing over and over and over and over and over and over and over to make money. And in order for you to do over and over and over, you can only do that if you have defined that. If it's in your mind, if it's not defined, it's not there. You won't be able to follow while you are trading. These criterias, these variables need to define. So again, what I'm saying, the strategy is about the opposite trend in the direction of the bigger trend, which is the gap up. So this is gapping down strategy. The usual time to occur, so you have to explain the time, what time it occurs between 9:30 to 9:45. Signal to identify the trade idea. First candle should be red, small candle. Stay below the pre-market resistance. Okay. Confirmation of the idea. Right. Second 5 minute consolidation. If I get the confirmation idea, if I get the second candle consolidated, that is cherry on the top. Beautiful, beautiful entry. And this is the my most paid strategy. I make a lot of money from this strategy only if I get the confirmation candle. Stop loss, should the break of the VWAP, or stop should be tight, as we should not be too extended from the VWAP. If the VWAP, let me explain to you again, okay? So now let me just refresh this. Let me just remove it, okay? Now just think about it, okay? This is fresh, okay? And here let's put the yellow VWAP, okay? So pre-market VWAP, VWAP market VWAP is coming like this, okay? And maybe, okay, let's see, VWAP is coming like this because right now we on the 9:30, so we don't know the rest of the how VWAP gonna trade. First candle is here, okay? Then you get the second candle, consolidation candle, okay? I'm just giving you exactly what I showed you here, okay? Now you tell me, based on my strategy, am I going to go short? Come on, quickly. Am I going to go short? So except the Guita, everyone is right so far. I'm not going to go short. Why? Because this is the gapped up stock. Okay. And if the stock is too much away from the VWAP, based on my strategy, is highly possible that the third candle it just squeeze me up like this. And my stop loss is too far. My stop loss is too far, and I'm not willing to risk that much. As I mentioned, what I mentioned to you guys, what I mentioned to you, if you do not have a right stop loss, never execute the trade. Never execute the trade unless you have a right stop loss. For strategy is there, time to occur is there, trade idea is there, signal to identify the trade idea is there. I have identified the trade. I'm ready to execute, but only one thing which is stopping me. What is that? Before I enter, I need to know my stop loss. My stop loss is too far. Now, scenario number two. Okay, let's take the same example. Okay, just what we do, let's take the purple VWAP. Okay, and in this example, the VWAP is like this. What I'm going to do now, what I'm going to do now, I'm going to go short. Doesn't really matter. The result is the squeeze. I'm fine with the squeeze. Okay, because my stop loss is here, I'm going to stop out. Maybe I'm going to take the stop loss of 20 cents. Okay, but if you see those stocks which are gapped up and then comes down, they usually go 80 90 cents down because they flush down very quickly if they're going to direction. So I'm okay if I will be wrong two times, three times with my right risk management, money management rule, taking 20-cent risk. I'm wrong three times, but one time I'm going to be right, and I'm going to nail it like this. Look at this. I'm going to show you. This is the INO. It was gapped up. Okay, it was gapped up. First candle, you and look at the VWAP here. You won't be able to see in the 5 minute. You see the 1 minute. Look at it. How close is the VWAP? I went short and look at it. The profit. I almost got more than a 1 point. Look at here on the workhorse. Okay. Do you see on the 1 minute candle how close is the VWAP? Look at the Fubo. Okay. Fubo was a bad fill. It's a little away from the VWAP. And Fubo, as I still remember, that Fubo gave me a very bad, hard time on that day because it took too long to break. So, any questions here? We reach up to the stop losses. Okay. Then you have to have a profit target in your mind. You need to see maybe the low of the pre-market levels or any other level I need to see which is further away for me to give the right return. And then if everything has been there, stop loss is there, confirmation of idea there, I signal identified trade, I've identified the trade pattern, I got the confirmation candle, I got my stop loss ready, I have the level too far, the profit target. The next thing what I do, the last thing what I'm going to do, what? You know what? The entry. Look at the chronological order. Why you are not consistent? Maybe you're looking for the entry first and rest is history. All the things come later. For me, entry is the last thing to think about. So if I'm taking a 20-cent risk based on this strategy, I need at least 60 cents out of it. At least I need 1.5 hour because I know this is a risky strategy. This is a gap up stocks. I'm being bearish. So when I'm going to be good, I need more return. And I'm okay to take two losses, but one good return make me 1.5 hour, 2 hour, 3 hours, and I'm gonna be profitable in the strategy. Any question, guys? This is your time. This is the most important aspect of the trade book, which I'm teaching you now. This is $1 million recipe which I'm giving you just like this. So what's the question, John? Oh, I said you said no, so I was just okay. No question at this point. Okay, okay. All right. So, all right, okay. So, this is very important. So now we have almost 25 minutes left. Okay. Uh, we have a 25 minutes left. What I want you to do is to fill out the template. Okay. Fill out the template based on your own strategy just quickly and see that whether at least do you have something in your mind even, or you don't even have something in your mind, or you just jump, or something is going down, or let's short it, or something going up, let's just go long. I want you to just quickly reflect based on this that whether do you have at least in your mind, because if you have something in your mind it is much easier to translate, but if you do not have anything in your mind, then you need to work on, you need to put a lot of efforts, maybe start from the beginning. And if you have that in your mind, write it down. We're gonna take an example now, and we're gonna discuss that as a as an exercise. Just fill out for one which you think you can best explain, right? And we can just discuss, whoever is going to do first, I'm going to take his or her example and we can discuss. So it's up to you how quickly you do that. We have 25 minutes left, and I also want to do one more exercise with you guys. You guys are not editable. Can you guys download, or you cannot download even? Let me check if I can give you the editable rights, because I have given, but let me recheck. Okay. uh, can you download that file? I think it should be downloadable. Yeah, download it and fill it out quickly and then share it on the Skype. Write it down, John. Write it down on this, and I want you to write all these criteria within those headings. Unless you can categorize them on these categories, you won't be able to make out. You need to identify which one you're gonna follow for identifying the trade. What is your confirmation idea? You know, and if you can also from your charting system, if you can post, give a snapshot, a screenshot of that day chart, that is going to be a pretty awesome. So then we can see what you see. Okay, and maybe I can give more value addition rather than just a theory discussion. I can see the chart as well. So give us an example what you have traded. I'm going to keep this open for now. I'm just going to mute for 1 minute, and you guys keep continue the work. Okay, let's take another few minutes, maybe 5 minutes, to finish this off. So we got from the Mauricio the strategy. Do you have any chart symbol so we can use it? And let me copy this and put it into the Google Doc. Um, okay, so strategy name gap up continuation. So that's good. Uh, and the name is good. Okay. But then what is the description? There is no description. You should explain what do you expect from this. It is with the trend, without the trend. Uh, some few lines explaining one or two lines about the strategy is very important. If you do not have those lines, you won't be able to see what you wanted to see. So, you need to explain that. Then usual time to occur, first 2 hours, too big of the window is not correct. You can have first 2 hours, it's too long. Okay, in 2 hours the stock can go up down up down up down sideways and then move, so you can't have the strategy for 2 hour window. 2 hour is too long unless you're kind of a guy who trade 30-minute charts. Okay, you don't trade first 5 minutes 1 minute candles. If your time frame you follow 1 minute, first 2 hours is too big of the window. You need to narrow down the important and the key thing what I'm trying to explain to you, that trade book help you narrow down your criterias and ideas, and you are on narrowing in a way that's so systematic and so narrow that you can easily see what you're looking for. If you're gonna give the vague answers, if you're gonna make it too flexible, then it's not the rule, right? It's just like, I'm gonna go long continuation. Okay, what then? Right? So, first 2 hours, no, it's not enough. So, you need to go back to the example which we just discussed. You have to say, you know, it has to be weak or it has to show the strong. How it need to be done first 10 minutes. When you gonna see? If you're looking for first 2 hours, you need to see the price action of the first 1 hour. Okay, when you gonna trade? All these are missing, so this is incomplete. you need to explain and define in your trade book. Number second, signal to identify the trade idea. Gap more than 3%. Again, this is not enough. This is the first criteria you even put your stock in the watch list. Okay, as we explained, this criteria for 3%, 4%, 5%, this is for your watch list. That even you're gonna consider any stock to trade. The volume, the RWolf, this is market capitalization. These are even just for the small criteria to even consider anything to trade. Uh, Saying that this is identified to trade idea, no, this is not a trade idea. Trade idea could be you say, okay, you're looking for a gap of continuation. You wanted to see that first, since you are saying it first 2 hours, maybe you say the first 15 minutes, the stock should not sold off, uh, you know, below the pre-market support. If the stock went below the pre-market support, then for you the stock is no more continuation play. Okay, you want to see that? I want to show you the example. Wait, and that's why people lose a lot of money. Let me go to the space. Okay, space is our friend, is our buddy. You know that, okay? So here, look at this. Stock gapped up on the on July 12th. What happened after that? Do you know? Or you want me to remind you? Look at this, what happened. For me, this was a gapping down. This is I'm going to play. Let me show you here. Maybe you will see that exactly. Okay, it's not letting me go more than let's go 15 minutes if I can go. Uh, Where is it? 12. Okay, here. 12 is here. Okay, look at this. I can't see the 5 minutes, so you can 15 minutes. Look at this. Stock gapped up. Okay, stock is gapping up more than 20%. Pre-market downtrending, downtrending. For me, this is a gap up stock. I'm bearish on this. For what? Based on the price action reading, I am bearish on it. What I need to see a 5 minute breaking down. Unfortunately, I can't show you here. Okay, here I can see that. Okay, this is the 14. Okay, look at here. Stock gap down. First 5 minute bearish, but what is that? Is a big bottoming tail, topping tail. As I mentioned, if there is tails, I'm not going to trade the stock. So I stopped it. I didn't trade that on that day. I didn't trade it. But but if I waited for it and I was still watching it, I'm still gonna short it here. This is exactly my first 5 minute consolidation, but consolidation happened after 1 hour and 15 minutes. Not exactly my strategy, my trade book, but again, the consolidation which I look and I still wanted to go short. Okay, what I wanted to see, as I explained to you, if you're looking for first 2 hours and you keep trying to go long, you're gonna kill your account. You're gonna kill your account. It never pulls back throughout the day. So you need to explain your criteria in a way that it narrow down your criteria. It has to be very straightforward. You do not need to think. You do not need to use your discretions while you're trading. Is these criteria need to be in your mind, in your trade book, as if it's been written, and you don't go against those criteria as a new trader. If you go against that, you're gonna lose money. So signal to identified trade is not 3%. You need to specify exactly the signals you want to trade that. Confirmation of the idea. Pull back in the pre-market, first candle red, small. I don't get it. What does it mean? Do you want to explain a little bit more? Pull back in pre-market and the first candle red and small. Okay, so you were trying to say that this should be the small and then you're gonna go long here. So what you think based on their criteria? Have you went long on the space on the on July 15th? Can you guys hear me? Yeah. So Mauricio, have you traded space on the long side on the July 15th? Oh, sorry, July 14th. Yeah, better. Otherwise, you've killed your account. Yeah, but even if it's not too volatile, the your criteria will kill you because your criteria is not clear. You have to specify and narrow down your criteria. The stop losses. Stop loss need to be defined. Okay, low of the red candle. This is also too weak. It cannot be just one candle stop loss. Either you look for the formation. So, for instance, if I just give you an example, if I'm going to go short after this consolidation, there's two kind of a traders. One trader is gonna say is a breakdown trade, and they're gonna go stop loss is 37.68 high of the day. Some traders VWAP is a stop loss. For me, if you have seen my results, I give very little room for my trades to go against me. For me, the stop loss is only 20 cents here. So I'm gonna go short 36.70 under 75. I'm gonna go stop 95, 20 cents. Only 20 cent stop loss. I'm not gonna give more room for this trade to work for me. Okay. So what I'm trying to teach you here, giving you again lesson here, that if your trade book does not have these criteria, first, if you do not have a trade book, what I understood, you guys don't have it. Second, if you from tomorrow you're going to build this trade book as a format, I give it to you, but you have to explain all these criteria. If you do not have these criteria explained in detail, it will be harder for you to be consistent in the market because market is volatile, market is random. What you're going to do every day, you're going to make some way different decision, different discretion. You're going to use it because why? Because your market going to correlate this to that. Since it is not written, you're not going to be very specific, very clear in your mind how you want to do that. So you need your trade book. So I wanted to do one more activity. Let's quickly do that because we have only a few minutes left. Okay, so let's go to the neo chart. Okay, and what I need to show you, the neo, uh, let me go here and load. Okay, so this is yesterday neo. I'm not sure have you guys followed the neo or not. Yesterday, Neo was gapping down. Let me bring it to the 9:30. Okay, this is going to be play live. Okay, this is yesterday Neo. I hope you don't know what happened yesterday, but if you know, I want to show you that how does it work. Okay, how you analyze based on your trade book. So now market is opening, the stock is gapping down. Okay, uh, you can look the daily. You can see the stop is gapping down. Okay, and there is a support around 41 level. You're looking at it right now is around 8 o'clock. Okay, let me load it to 9 o'clock, 9:30, and we will start study from there. Okay, it's 9:36 right now. Okay, this is, let me put the 1 minute chart. Okay, so now what we see here, we see a neo chart gapping down, making a support in the pre-market. Market opens, first candle coming in. Market opens, 9:30 is already done. Let me bring the market watch here. Okay, are you guys watching it? Is it 9:30? Okay, and let me watch it so you can see that. It's 9:31. 1 minute. First minute is over. Market line is there. Very bearish right now. I want you to tell me by writing based on your strategy how you're gonna play the stock. Okay. What I'm looking right now, it is more than 50 cents candle. Okay. All right. Very bearish. Stock moving up, breaking down. Okay. Breaking out, making high of the day. Would you see the stock is strong or you see stock is weak? You have to think who is in control, the buyers or seller. How do you think the seller is in control? Look at the price action. People are buying on this candle. Almost 80 cent buyers. From the low of the day, suddenly people bought it back all the way. How you can say the sellers are in control? Again, the stock is over the VWAP. Pre-market low is here. First 2 minutes, the buyer bought it all the way to 41.15 to 41.75. Look at the how engulfing candle is. Really strong candle. All those people who wanted to short here, they all squeeze out. All buyers are very, very heavily buying it. The moment it touched the VWAP, the immediately price pull back up. Okay. Now we can say, okay, buyers couldn't hold this level. Its price is coming down. Buyers are getting weak. Now you can say, but not before that. Now you can say that the stock is weak. Buyers couldn't hold the VWAP price action, and yeah, now you are looking to see is as a trend, as a bearish trend. I want you to tell me also how would you how would you going to trade this? That is I wanted to know from you. Based on your criteria, how would you going to trade that? Look at this, how buyers in control. Immediately sell off, buyers came in. Immediately price. Look at the size of the candle. And 4105 to 4150 in just only 20 seconds. So it's not a strategy, it's just a gap down stock. I want you to tell me that if it's a gap down, how would you trade that? Let me just pause it here. Some people trade it as after the first gap down, the moment it broke the VWAP, some people go short here. Okay, so they have a trade idea, gap and go, first pull back, and then again gap down. So now, if you go short here on the 41.25, what is the stop loss? Your stop loss is high of the day, which is 50 cents. 41.25 to 41.63, almost 40 cents. Are you able to get the 40 cents here? Yes, you're able to get the 40 cents here. So 41.25 to 40.85. But would you able to take the quick partials? But before it comes to your uh, partialing criteria, what happened? It spiked up, and you're about to stop out. Do you see that? You're about to stop out. All right. Let me show you that how we have traded, right? Here. I think it's not here. Where did I copy that? I think it's not here. Just give me 1 second. I'm gonna show you how did I trade that. I'm not sure where did I kept that document. Okay, I'm gonna show you from here. Okay, let's do that. Okay, so let me show you here. Okay, I went short on the stock. This is the snapshot of my trade, and but not here. Do you see that? Move up, down, no trade for me. Based on my trade book, I went there short where on 41.10 after 950 with 20 cent stop loss, and I got it more than 60 cents on this. I didn't chase here. I went long here. Look at the execution and took the partial way. Okay. So anyway, so we're gonna end the session now, and hope you have enjoyed it. Okay. Hope you have learned from this session, and it's all about having your trade book, having those criteria, explain those criterias. The more detail you're going to put, more examples you would have supporting your entries and exits based on the chart. It is very important for you to be successful as a trader. And since we all are here, I'm gonna just share you this. So if you need to practice uh, for your strategies, you can use this link. Is a 7-day free trial on this trading simulator, and this software have changed my trading, and I show you the example as well, right? Just we have did uh, the past data. If you do not have access to the simulator where you can go back in the history and practice and learn the price action to understand the buying power and see that who is in control, it harder for you to be the intraday trader. A 7-day trial, free 7-day trial based on this link, and is not expensive. I think is going to cost you for the whole year around 250 something like that, and I think is one of the important investment you should have on your trading. You should have access to this platform. It's very important for you to have that, and for you to be successful as a day trading. The other tool I wanted to say is the uh, your journaling. You also going to get using this link the 7-day free trial. You need to do your journaling. If you're not doing journaling of your day trade, you won't be able to successful. These two tools you have to have as part of your trading. If you do not have that, you're gonna lose money. It's better you invest on this rather than losing the money. Okay, and I'm gonna show here as well, so in the recording people can see as well on the screen. Uh, these two, the trading sim, I can post you the link and email you as well. You should have access to both of these links, and these are very important. Okay, and I'm not going to sell you anything here, but I just wanted to say that if you need more help, okay, by building your trading strategy, being more consistent in your trading, and if you need more detailed course, detailed help in mentoring, live trading, or you wanted to work with me to help you build your trade book and share you my strategies and give you more guidance, you can always contact me. And there are multiple packages, multiple education I offer, and you can definitely join me if you want to. So I really want to hear some reactions from you on this session, because the first time I'm sharing my screen here on the screen, so I want to see your reactions so people can also see who will join or listen the recording later on. So how did you rank this workshop? And you can be honest and candid, and I'm recording this on the screen so everyone can see who will consider this workshop attending later. They can see 100% live reaction from you guys, whether you like it or not like it, you enjoyed it, you learned it. Do you think that this is going to help you in improving your day trading? And yeah, that's the way I can possibly help you. Thanks, John. All right, so for others, if they're going to just give the reaction, that is also going to be helpful, that whether you like it, enjoyed it, learned from this. Quick reaction before we close it. I don't want to, you know, stretch this for long. Uh, I'm I wanted to close the recording as well. Really appreciate Guida, Lois, and yeah. All right, awesome. All right, okay. So, all right, okay, guys. Okay, thank you very much, and see you tomorrow for the day trading in the morning. You are welcome to join in the pre-market show. It's all free. Okay, it will help you to improve your day trading for sure.